At this point, what can be done by the regionals to help stem this slide?
Well, the regionals seem to be on pretty stable footing fundamentally with deposits. Like Western Alliance was saying, deposits are up $1.2 billion thus far in the quarter, and reiterated guidance of $2 billion in inflows for the second quarter. So everything seems to be showing that they've turned the corner from the declines last quarter. Yet the market's just not absorbing the positivity on that front. So that in itself is the worry, that the regional banks can't say anything to combat the market fears.
Do we need to have full guarantees of deposits? And if that guarantee existed, would the situation calm down?
I think at this point there needs to be a more holistic solution from Washington, from regulators, because no matter what the regionals are saying from a fundamental view, it's not arresting the declines in the market pressure. So there needs to be a more of a government response and a deposit guarantee, maybe a blanket guarantee over a short period of time to calm market fears would be helpful.
And this raises the question, though, Guy, about short selling ban, right? Because if the fundamentals are there, if the shorts are pushing around the stock and then forcing, say, the big guys like a Vanguard to have to sell, if that is indeed happening, do you need the short selling ban?
Well, the US has tried this in the past. Europe has maybe tried it a little bit more aggressively. Herman, what is the history in the States of trying these kinds of things, and how effective do you think it would be?
Right. From what I understand, there was this measure during the financial crisis, and I'm not sure how effective it was, given the fact that there was ongoing market volatility. I do think that really what's happening with the regional banks is that while there's pressure on the stocks, and they're conceivably wouldn't be a floor, because any potential buyer would wait for the FDIC to come in to absorb and close the failed bank, and then transact with the FDIC to get a better deal. So a potential white knight is difficult to forecast for these wobbly banks.
To that point, PacWest did say it's exploring a sale or a partnership or something.
Right.
But to yours, we have a playbook now.
Right.
You wait till the FDIC takes into receivership, and then you get some help as a bank to go ahead and take it in. You get to lead the stuff you really don't want, and you get some kind of backstop, so you don't have to build your own liquidity ratio. So why would anyone go in and want to buy something?
Exactly. And you book an immediate gain, like JP Morgan did, like the other banks, like New York Community, like First Citizens. They book an immediate gain to their book value because of the strong economics of that deal with the FDIC.